Hey folks, today is Sunday, March 22nd at 3:40 p.m. My name is James, and let's take a look and see what's going on in this market, or at least what I see. Um, so I have these lines drawn for descending channel slash falling wedge. I think it's much more of a descending channel at this point because it's so long. Um, and I don't know when it's going to bounce out of it. So if the market actually turns to the upside whenever this virus stuff changes, um, the time to start like looking at really buying would be when it crosses over this line, this upper line for the channel wedge pattern. It's interesting because right where the S&P is sitting, this line here is the bull market line all the way back to 2010, 2009. It starts there and goes up and up and up, and that's where we're sitting. But we haven't necessarily, as far as I can see here, driven all the way through it. So I don't see like a red bar, red bar, red bar down and just slicing right through it. There's a couple of red bars here that are kind of big, like that one and that one. And this could be a concern here because we've kind of went through it and then hit it and bounced back down. That could be really, really bad. There's guys on TV talking about a recession to a possible depression period. I guess that's possible, and the market will probably reflect that as well if it undercuts this bull market line. Obviously, there's enough news and negativity, to drive the market down through the bull market line and actually keep us below it for a while, which would really indicate a slowdown. But so it's hard to tell. I mean, as long as it stays in this channel, I think that's kind of good because we have a kind of a controlled up down motion without big red slicing bars, which I really don't want to see come up. We had them up here, kind of really big all of a sudden, several big red bars that took us down. But as long as we stay in that channel kind of pattern, I think it's a lot more controlled. The market is kind of just digesting what's going on. Even if it cuts through and stays below that bull market line, I think that's still constructive, I guess. It's kind of what the market is supposed to do. But we'll see. Anyway, that's the lines I have are kind of tracking what's going on, and I think it's kind of following, what it should be doing, I guess, in this kind of an environment. So I have the same thing on the NASDAQ. These lines are holding. It's bouncing off the top, falling back down to the bottom, and it keeps vacillating inside there. So I don't see it turning yet. I mean, it's news is just like before when the tariffs were controlling the direction of the market. Any coronavirus news is controlling the direction of the market at this point. So again, it's best thing to do is stay in cash. That's what I've been doing, except I own a stock right now, and I'll show you what that is, and I'll show you some of the other things I'm seeing in a group of stocks that I'm following. But yeah, I would say stay in cash completely. I don't see the direction of the market changing at the moment, except for everything we've been doing, exactly the same stuff. 1,000-point swings or 500-point swings or whatever, day in and day out, until we get some clear direction to the upside or the downs. Probably the upside. I mean, I think Trump's right that when all of this is done and we get, to the other side of constant news of, oh no, there's 1,000 more cases or 10,000 more cases in New York, which just happened, something like that. If we can get to the other side of it, where we start to see a decline in cases, or we start to see more people recovering from this thing than getting sick from it, that's going to start turning everything around. And then when business starts opening up again, I do think the market is actually going to roar back. But I want to see a pattern form on the indexes that gives me an indication that we've actually consolidated, we've hit a bottom, and we have this consolidation waiting to go, and then we start getting better news, and then the market starts to move. So we might get a break to the upside of this descending channel, but that still might not be the best time to buy. So let's look at some of these stocks that I'm looking at. This is the one that I own, Zoom Video Communications, because the environment. Everybody has to be remote. Everybody has to start working from home. That's what Zoom does, remote video communication. So I saw it in the news as soon as this stuff started. People were starting to buy these companies that were, um, that might benefit from the environment. And, it obviously popped here and consolidated there. I didn't buy it in any of that stuff. As soon as the market turned, I was like, whoa, what the heck's going on? And I let the stocks that I was in stop out and I didn't buy anything more. And then I just started waiting. But Zoom actually came up and finally formed a pattern that I could buy out of, and I bought it in here. I bought it about right there, 117.81, and I've been in it for the past few days. So, and it's moving. It's a bit concerning because on certain days it's up like $13, and then all of a sudden it pulls back, but it still closes with a gain, and I think that's really positive. So I'm hoping that maybe we'll get at least one of these days where it's going to jump $10 or $13 and actually close that way, where the market's not going to have a gain that just disappears into the close, which has been happening the last few days. So anyway, that's the one I'm in Zoom. I bought it right there. So if you look at some of these other ones like Shopify, the same kind of descending channel, falling wedge pattern is forming. And I'm seeing that in the companies that I think are strong. Like Shopify was super strong back in here. Like it had an incredible move there. Great earnings that popped it out, and then all this stuff hit right after that. So to see a consolidation and a controlled fall where you're not getting this red big bars forming is good. It's within an upper and lower support and resistance line, so that's good. So that's one I'm watching. Nvidia is another one, and these lines are kind of funky because it might not be exactly lined up, but kind of the same thing. AMD looks better to me. That looks like a nice big falling wedge, and it's still kind of controlled. It's not these big giant red diving bars. Light, again, it's kind of falling wedge. Still looks a little more controlled. And then PGNY, which I had actually bought back here, and I believe it was in there. It was a triangle. I took the lines off, but there was a triangle right there that it broke out of, and then everything turned around on me. So this was one of the ones I was in right before all this coronavirus stuff started hitting the United States, and then the market really started to turn over. So still, I think it's a strong company. So we have a consolidation there forming that I think is probably viable if the market turns. I think this stock is probably still viable if the market turns. And these other ones, there's another one, MSCI. I just found this one, so it's another kind of. It feels controlled to me. It feels like it's a controlled descent. You're getting up, down, up, down, up, down, up, down. More of a consolidation decline than any kind of a big red dive. So that's really the ones I'm watching for potential buys when the market turns. I wouldn't be buying any of these now. I don't recommend buying any of these now. I still think the market's going to be all over the place for a while. Again, I bought Zoom because like the environment that we're in, this company can obviously benefit. These companies have to set up remote work and remote communication for workers. And when this thing formed a pattern, I tried it and it's working. So that's the environment that we're in. And these other ones I just have, they're kind of coronavirus related, and I'm just watching them. There's no real patterns on them. Nothing viable. I'm just kind of keeping an eye on them. So that's it. That's all I got. So as far as the indexes, just be patient, I would say. Be patient. There is something there. There's a falling wedge, just descending channel there. If it breaks to the upside, I'm still not sure that would actually be viable unless there's news. Something changes to the positive related to the coronavirus that actually starts to move the market up where we can get a decent close and it actually breaks out. So that's what I think it'll take. So that's it. See you next time.